Hello.
How
How
are
are you?
you?
Hi, Billy.
Hi, Lisa. Nice to be here again.
Nice to see you again. So I spoke to you already earlier this week, and I guess the other day when we spoke, we were talking about what I wanted to talk about, which was real estate. And I'm gonna link that video when we were chatting about real estate because it was a good discussion. Um,
Right.
and I just wanted to vent a little bit about my frustration with the 8% interest rates and stuff. But today we're gonna chat about what you want to talk about.
What I want
And
to talk about.
on your investing journey so far, and you let me know what's going on today, and also mention your channel as always, my fellow YouTuber.
So, my channel is Billie Said It on Ear. So, hi, guys. Now, today, one of the things that I wanted to talk about with my investment journey is the fact that, like, I'm really a novice at it and the journey is literally just starting. I feel like I'm late to the game. Um, I wish that I had more knowledge and education on this subject. But hey, better late than never. I'm here now and I'm learning. Your videos have been extremely helpful and just learning as I go. And one of the things that you have gone over with me is the UTMA for the accounts for my children. So I have one thing in the bag that I feel accomplished with and proud of.
Okay.
Yeah.
All right. So when you say you wish you feel late to the game, where do you think you should be at your age, or what do you think is lacking? Because I want us to talk about it, and I want us to make a plan to make improvements.
Yes. So I feel like everything is lacking. Like I wish that like I just feel like I should be more educated on it by now. It's like, I'm an adult. I should totally know how to invest. I should know the terminology. I should, just feel comfortable having generalized conversations when it comes to retirement savings and things of that nature. And I just, I really should have learned about it in high school, truthfully. And I come
No.
from, no, they should definitely teach
Oh,
this.
they should teach us
They
at that
definitely should.
age. Yes, they
Yes.
should teach us. Do they teach? They don't.
Yes.
Um,
No,
and,
they do not.
as a older person that has known you and had like an influence in your life, I would say, for
Yes.
since earlier years. I wish I knew. I wish I had the foresight and the mindset to share what little I even knew with
Right.
the young people that were around me earlier in life. But I'll tell you, for many years, I mean, I had enough. I always contributed to my 401k. I thought everybody was doing that as much as they could. But now, so many years later, I'm finding out that people weren't even doing that. But when you're hanging out and you're going to happy hour and you're going to brunch, you don't bring up that. You don't talk about that.
No, it's not
Um,
talked about. To be honest, my first real intro to 401k, like in the real world, like, with work, it's like, okay, you have this 401k, you can contribute to it. Maybe there is a company match, maybe there isn't. And so I'm like, okay, I have common sense. So company match. So if I put in money, the company is going to put in money. So I'm like, okay, that sounds good. Sign me up for that. But like, I didn't really know what I was doing or what, it's just you learn as you go. And I don't come from a family that has a knowledgeable background in investing. So I'm literally trying to pave the way and learn now so that for my
mhm.
kids, this is second nature to them. They wake up
Yes.
for breakfast talking investments and looking at portfolio. Like
Yes.
I want this to be normal
The
for them.
confusion is ending. It's ending.
Yes.
There's not going to be any young people around me, and I'm
Yes.
talking about your children's age. It's not going to happen. We're ending this. This is the
That's it.
last generation
Breaking
that is going
generational
to be
curses.
okay. So
Yeah.
do you have the chat up on your screen? Can you see
I
everyone?
I do have the chat. Hello,
Okay.
guys.
Hello, Realist, Lashes,
Oh,
Mike.
6%.
Um, thanks for tuning in. Please give a thumbs up.
6% is a good match. These companies are cheap today.
Yes, my company matches 3% up to 6. So as long as I contribute a minimum of 6, I get a 3% match, and that's it. But as much as I can, I try to raise that. But let's talk about things like that you've mentioned, so that we can really dig into where we're at. So you set up UTMA accounts. You chose the investment account that you chose for the kids. You have 2 kids,
Yes.
mom of 2, a boy and a girl.
That's it. Yeah, 2 and done.
So did you set up accounts for both of them?
Yes. So I went on to Fidelity and created the 2 separate accounts so they each have their own.
Okay.
And this account is eligible to be transferred over to them once they turn 18 and they can continue it from there. I don't know if I'm gonna, well, they'll be educated on it. So maybe I will tell them about it because a lot of people say, oh, well, you shouldn't choose that type of account because they can mess it up. But again, my goal is to have them financially savvy and know about all of this. So if anything, they might be disappointed, like, Mom, why didn't you do this? Like, I got to improve it, make it better and not take it and, undo all the work that I have put into it.
Okay. All right. So why did you choose? That's the type of account that I also chose for my minor daughter.
Right.
So why did you choose that instead of the 529 plan, which is specific to education?
So I chose that because I didn't want the funds to be tied down to just for the education.
Mhm.
Now I know, or I think I know, that if they didn't use it, say for example, they didn't want to go to school, they didn't want to go to college, they didn't want to go to trade school, that I would have been able to utilize the funds for educational purposes as well. But what if that's not in their cards? Like, what if they're an entrepreneur? What if, not everybody's destination is college or trade school, and to have all of that money there and cannot use it, but that could have been money that would have helped go into starting a business, or they're gonna have to retire at some point. So at least I can 100% know that this money will be used and there's not going to be limitations on how they can spend it when they're able to access it.
All right. All right. I felt the same way.
Yeah.
So, in the UTMA accounts, I have to stress this because I guess some people, I never thought about this until I heard other YouTubers saying it. But once you put the money in, you then have to invest the money. Just making the deposit is not the end of it. So,
Right.
what are you investing
Well,
into, if you don't mind sharing?
okay. I don't mind sharing, but I have baby steps. So I opened the account.
The account is created.
The account is created, and
The
the
account
account
is
is
linked to a bank account.
it's linked to a bank account, and I have
Okay.
the automatic EFTs coming in every month. So the account
Okay.
is funded. Now I have to tell the money what to do, but I don't know what to do yet. So I can't give instructions on telling it what to do if I don't know what to do yet. And so here we are. So I hope at the end of this video, you can give me the tips on guidance on where I should be directing that money.
Okay, okay. I'm glad we're talking because I didn't know that the money was
The
not
money's just
invested. The
smiling at
money's
me.
just
It's
getting
there.
into the
I
account.
check it. I make sure,
All
it's
right.
a scammer didn't clean out the account, but it's there.
Okay. Oh, hello, Stock Brother. Hello, everyone that's coming in. Joyce, thanks for tuning in.
Hi,
I have,
everyone.
let me put up her name so that you can know who I'm chatting with. Banners. Let me see. This is also a little practice for me on live because I don't do this often. So my guest with me, her YouTube channel is Billie Said It on Air, and we are just chatting about her investing journey right now. Um, so all right, so the money is going into the account. Both kids have an account, but we need to work on the investing.
Right. Yes.
Okay. All right. So you're going to get in contact with me. We're going to set up a little time slot to chat next week.
Yes, we are. And
Okay.
I also contacted them recently. You know, the holidays are coming. And I always tell people, like grandparents and relatives, not to buy toys for the kids. Like, you know, buy books or clothes because those are always wanted and needed. But, like, you know, let's invest in their future. They never listen. They never listen. But last year, I taught them a valuable lesson. I didn't take any of the toy items home with us. If you want them to have toys, they'll play with it over here. And so people were like, okay, she's serious. So now they're asking me this year, since we can't buy toys, what should we do? And I found out from Fidelity that they can make their own EFT or wire transfer, whatever money they were gonna, even if it's $5, $2, $1, whatever it is that you were planning on spending on the toys, deposit it into their account. They won't know about it now, but trust me, later in life, they'll appreciate it and they'll know, you know, grandma, grandpa, auntie, whoever, you know, contributed into their retirement. And that $1 grew into, you know, $1,000 or whatever the case may be. And that's more valuable than a toy that they're going to break and not even remember by New Year's. So, you know.
Okay. And it's not necessarily into their retirement. You know, this could potentially be for their college or, you know, things that they need earlier in life.
Right. Absolutely.
Okay. And I can attest to what you just said, because I know there was one day I was going to buy your daughter a toy and you were like, no, thank you.
No, thank you.
I wound up buying her, I think, two dresses that were in the next season.
Yes.
And you said that was an okay gift.
Perfect.
Something that was needed. So that was a little sad because she was in the store with us and saw what I was about to buy her.
But the thing is this, and it's not that I'm trying to dictate what people want to give for them, but it's just literally you're wasting your money. And I promise you, my kids will play with it for seconds and then they forget about it. If I go and ask her last month, what did you get for your birthday? I don't know. But if I say, oh, well, what did you do? Like for experiences, oh, we went to the aquarium. We did this. We had, you know, they remember those things. The materialistic things they tend to forget. So you can either, if you want to take, you know, fund a trip for them to go on a trip and have that experience in life, or fund their future. Those are more, they'll remember that.
So, okay. So as I said, I'm using the same UTMA account for my daughter's investing. And what I'm currently investing into for her, it's 80% ETFs. And that's, you know, her foundation. But I do a few individual stocks. And you can do, you know, we can pick one ETF fund to get started with the kids' accounts. But her individual stocks that I do, are Home Depot, Apple, and Tesla.
Okay.
And then, like I said, I just do small percentages there, 80% into, you know, those big foundation ETFs that we've spoken about before.
So now those are the long-term buy and hold stocks, right? Mm-hmm. Okay. So now what about
everything in her account? And I mean, your children are, you know, small in the single digits. They're little.
Yes.
So everything is going to be, we're looking at it like that as long term.
Right. Yeah. Now, and maybe I'm mixing this all up and you can correct me or somebody in the comments will, but you know how they say, like, all right, say if I wanted to do a 401k and then they'll say like, okay, they have the aggressive markets, where they'll take bigger risks and you have the potential for the bigger reward, or they could go, you know, scale it down, you know, to moderate or low risk. So is any of that a factor in these type of accounts, or how does that work?
Well, I'm sure you can talk to them about it. I felt that I was in the place where I knew what I wanted to do with my daughter's account.
Right.
So I pretty much structured it the way that I wanted. But you can get that type of guidance if you want. But we know it's for their age. We're going to have it be something stable. I'm just looking for, especially because, you know, I'm the mom. I don't want to do anything to make any mistakes with her money, even more so than my own money. So I make sure that I made the most sound choices that I think I could have on her behalf.
Got it.
And, that's what I'm going to try to encourage you to do. And you can have that conversation with them. They are very helpful. I think their customer service is really good. When I call, I've been having a good experience, and I've actually moved money from empowerment so that I have everything at Fidelity now, because I was wanting a different experience and I thought I could get it over there.
Right.
But as far as for yourself, we're gonna come back to the kids, because
Mama neglected herself. I'm gonna tell you that right now.
What do you mean? Okay, so I mean, we all work different types of jobs, and
Right.
Some employers don't. We're self-employed. We know lots of different people in lots of different situations, whether
Right.
self-employed, or we know a lot of people that were working in the school system, 403B instead of 401k. But whatever it is, if you have a company that you can do it through your company and get a match, or just for the simplicity of it, I would say you can start there as your initial account. But if you don't have an option at your job, or you're self-employed or not working for someone that has something, I still want to make sure to encourage people to, you have to go and create something of your own.
Yeah, and that's the problem, is that I am 1099 self-employed. And so I am my own financial sponsor. Yes. And therefore I need to, add that to our to-do list on getting me started with that, because now for my husband, he understands stocks, and I kind of I guess got lazy in a sense where I kind of let that just fall. Okay, he gets it, I don't need to get it, kind of thing. But that's not true. I do need to understand this. I do need to, have things going under my own. And so he has all of that under his, and I just kind of, oh, okay, great. Our account is looking good. These are the things I say, oh yeah, we're looking good for retirement, honey. This is great. We're doing good. What stock did we purchase? Oh, we got more Apple, but under my own, I don't have anything. I just, no, not yet.
Okay. I think, yes, I would like you to have your own account, most definitely.
Yeah.
So, and this might not be, please, guys, chime in the chat. Thank you guys for coming in. Wellness, Growing with Hudson, and everyone. But me personally, I know you are a young woman, with young children, but I think you need to prioritize yourself if you see that you are behind in your retirement savings. Yeah. Especially maybe not so much you, because you have the time to catch up in your 30s,
Right.
But if you get to, 40s, 50s, and you're really behind with it, I think that you have to prioritize yourself and realize that you may not be able to, in my opinion, pay for college, pay for weddings, and doing all of these things, because, if you're haven't focused in your earlier years on prioritizing your savings.
And now for the 401k, if I was to create one, let's say through Fidelity, don't they have a cap?
It wouldn't be a 401k. You would probably you would choose, they have, investment accounts. 401k, that's going to be from your employer.
Only through employer. So you can't have a self-funded on your own.
I don't think it would be called a 401k. You would choose an IRA or a different.
Got it. Okay.
A different type of fund.
Now with the IRA, does the IRS also limit how much you can contribute per year, like a maximum limit?
Yes, there is limits on that.
Did they increase that limit this year, starting for 2024? I think I read something.
Yes, I did a video on that. I think I might have put it out.
Maybe it was your video. I got the information somewhere and stored a piece of it here.
Mm-hmm. And then the same thing with that. Once you start doing that, like right now, I see Lashes is mentioning some funds, FROOO, and FFFGX. I'm not familiar with those two, but I started a traditional Roth IRA at Fidelity just recently with some of the money that I was mentioning that I moved over from Empowerment. And I've been investing heavily into FXAIX. And I also did a video about that. And that's basically Fidelity's version of the S&P 500 funds, similar to VOO.
Okay. I heard of those. So that's okay. Good.
Yeah. So
So
Lashes is
now,
mentioning that she believes that it's 6,500. So for 2024, that's going to be going up to 7,000.
so now, would that be 7,000 each or 7,000 collectively between the couple, the married couple?
I think it's each.
Each.
But
Okay.
I can share the link with you from the IRS that gives it. Well, it's tagged in my video, and it
Right.
gives some outline as to what the new limits are going to be. And obviously, like I said, Fidelity is really good with answering those questions and helping you with guidance.
Yes.
But from these funds that Lashes is mentioning, they sound like Fidelity funds also.
Okay.
But yeah, so it's not going to be a 401k or a 403b, but definitely you're going to have your own retirement fund that's going to be locked in, just like ours, that we can't touch it until 59 and a half. But it's going to be created in the same way, but you're going to have to do it and fund it yourself, and either choose I would think I would well, you're going to have to make your decision on what you want to do. Right now, I have money that I'm investing into funds.
Right.
I have 3 different retirement accounts. I have ones that are in date targeted funds where they're just kind of a set it and forget it kind of a thing, where I have it set to, like you were describing, what type of tolerance I have, risk tolerance and stuff like that.
Right.
So I chose a year fund that I thought was in line with what I wanted.
Okay.
But then I also have this newest traditional Roth IRA that I am investing myself. And I've only started with that one fund, but I've been going heavily into it. I would say for maybe about 5 weeks now. So
Okay.
it's a recent account that I started building.
Okay.
So you have things that you have to work on. We have the UTMA accounts, but we're
Yes.
not investing. We don't have an account for you.
Now,
We
so
have-
is there a such thing as a joint retirement account?
that I don't know. I wouldn't. I'm not sure. I don't think that there is. I don't know if anyone in the chat is is aware of that. I am not.
Yes, Fidelity is very user friendly because they're patient with my questions. Because I always ask questions, and I'm not, if I still don't understand based off the answer, I'm gonna continue asking until I fully understand. And their patience is amazing. They break it down, they explain it. I feel like I'm in school again.
Yes. I I think they are great. And I just want to share something for a quick second. Are you seeing the screen?
Yes.
The Fidelity screen?
Yes.
Okay, so this is how much do you need to retire? And this is just a little bit of a guideline that Fidelity has on their site. And it says that for example, if you're 30 years old, you should have 1 times your salary. 3 times by 40, 6 times by 50, 8 times by 60.
Jeez. Okay.
Okay, so I saw this recently, and actually, my current employer uses Fidelity. So my 401k is at Fidelity. So they came in house and were having some meetings for us, and I went, and they were sharing some information, and that's one thing that they shared, as well as you should have about 15% of your salary. You should be saving about 15% for retirement. But I thought that was a point that I wanted to share quickly as we were chatting, so that people could know whatever, age range you're in, are you behind going by these guidelines? And you might not be, you know what your financial situation is. You might think that that's a bit much for your needs, even though it's, it's hard to project, especially if you're younger like you, but you know what you earn usually in a year, you know what your spouse earns. And are you guys in line that you have 1 year so far into your retirement account? I'm not literally asking. I'm just
I was gonna
saying.
say into his is everything is looking good. Now,
Okay.
see, here's the thing. So I'm not sure if you're familiar with Dave Ramsey, right?
I am. I am. I'm
So
not. I never was a huge fan, but I do know, his points, and some of his philosophies are a bit much for me.
yeah, so some of them are, I feel, it's a little bit dated, especially because we're heading towards a cashless society, and getting rid of, cards is not really ideal today. But nonetheless, following his baby steps, or he has a program that is the baby steps to becoming financially free, debt free, have your investments and everything in order. So I am in the middle of his program, and I will get to the investment side of things. However, he doesn't believe that you should be contributing into, whether you have a 401k, whether you are doing, self-funding things with Fidelity or whoever else, that you should be paying off your debts first, except for your mortgage, before you're contributing 15% of your income into it. So that's kind of more of a reason why I didn't fast track into, trying to cram all of the lessons of investing, because I'm not there yet. I'm still knocking down away at the debt, and we're almost there, outside of the mortgage. So that's partially why I just kind of, but for my kids, even though technically it's still investing, I just feel like certain sacrifices I'm trying to make now, the more that I put in now while they're younger, the more that it'll grow. And so, but yeah.
Yeah, yeah. So, I mean, maybe we need to dial it back a little bit, it sounds like. But you are gonna you're gonna do things the way you want. Hi, Wanda, and everyone. Thanks for tuning in. Please
See?
give a
Lashes
thumbs
got out
up.
of debt too. See, I'm on baby step 2.
So really, what I have kind of said and try to encourage with the investing, because I always hear people say, is it too late and these different types of things, and I'm confused. But yeah, I definitely feel like before you get started with investing, you need to get rid of the credit card debt. I know if you have a variable rate, it could be 20% or higher right now. So, but at the same time, I would not, if I had a company match, which you do not, I wouldn't, focus on that to the point where I wasn't. And also having emergency funds on hand, so that every time something happens, you're not having to then use the credit card and run yourself back into the same problem. So have a significant emergency fund, so that when something comes up, whether it's big or small, you can take care of it in one shot. So
Right.
that's what I've been trying to do. And I keep my emergency funds in my high yield savings account, which is at Discover. And it's going to take me probably 2 days to get my money transferred to my regular local bank,
Right.
if I do have an issue. But I have space on my credit card. So the way I look at it is, if I run into an emergency, I'm going to use my credit card. But before the due date comes around, I'm going to figure out, do I have enough money to pay this off? And
Right.
hopefully I try to have a substantial amount, enough that whatever it is, if it's the roof, the car broke down,
Right.
I can just deal with it and move on, and just have to build the savings back up.
Right.
But at the same time, not run myself into paying interest, even if it
Right.
is just a few months, because sometimes you just get into a place where you kind of let that credit card debt linger, and before you know it,
It's
too much
snowball.
too much time has passed.
Yes. Absolutely.
So you weren't So you feel, it sounds like you wanted to do certain things in a certain order, but you kind of just want to do it all. You want to make the kids accounts, you want to get going with your IRA, but you know you have some debt, and but you wanted to move forward with everything.
Yeah. So he had said a phrase that I can't, this is not like quoted exactly, but basically it's a false sense of like comfortability or relief or feeling like you're okay if you have this debt and you're paying interest and you owe, and then you have money in a savings account, right? So it's like you don't really have money, like you have debt. Like if if you have $2,000 in the savings and you have $2,000 in debt and it's accruing interest, you don't have anything in the savings really. Like, yeah, you can, if a random emergency, your tire blew out or something that you needed to cover, you have that. But you might as well say you don't have any savings because technically it's the bank's money. So you don't really. So I'm like, okay, Dave, you got a point there, Dave. Let me go ahead. You are a millionaire. I'm trying to get to where you at. I need to listen to you. So that's kind of, but the fear of taking so long and losing time for my kids is why I said that's the one thing I'm kind of bending the rules. And I know he will probably look at me and say, this is stupid tax, but I just don't want to lose that time that they have on their side that I didn't have the luxury to have. Like my parents didn't even know that. They probably right now to this day still don't know that they could have done that. And so I just want them to have that opportunity to just like literally just let the money grow.
Yeah. But I came from a very, my dad's side of the family, I feel like there were some people that were knowledgeable on it all. And my mom's side probably too, but the information was just not shared,
Right.
And my most immediate family definitely did not know. And probably even if they did, would not have prioritized it because, just day-to-day life was enough to get through with the bills and everything. But we just have to take our time to make sure that we're doing these things as we can. Saving for the kids, having life insurance, taking advantage, especially right now, with the interest rates being favorable as far as savings and potential for investing. But yeah, we didn't know. And all we could do now is, now that we know better and we're having these discussions and we're here to encourage each other, is do better.
Yes.
For
sure.
So like what you often say, or not you, but people, what is confusing about investing? What is confusing?
Oh my goodness. It's like speaking another language. I swear. And so, okay, for me, I can't speak for what it is with everybody else. So it's like, okay, there's a lot of acronyms that gets used, right? Like, oh, 401k. Like for somebody outside of knowing what that is, it to you is that's the basic of the basic. Like if you're talking finances and stocks, this everybody investing, that's just like saying hello, right? But for somebody on the outside, a lot of these like S&P 500, like I know what they are now, but there's a lot of acronyms and terminology and language that is common language in that industry, but it's not common language for those of us on the other side of the fence. So coming into a conversation like, oh yeah, do you have this? Do you have that? And it's like, whoa, okay, wait a minute. Like what's going on here? Oh, don't invest in this.
Let's talk about you right now. Is there anything that is still that you're still confused about? I guess you put the money in the kids' account but didn't invest into it because you don't feel confident in what you want to invest into?
I didn't know I was supposed to really do much else with it. I thought
you thought you were done? You put the money in the account, you thought we were done?
Basically, yeah, I kind of knew that at some point I would need to be like buying stock or something or another. But to be honest, I thought I was really doing something with transferring that money over. And I feel like I've been receiving information better piecemeal. So like, okay, you've said over time, like, oh, do you make sure you have those retirement accounts, investment accounts for your kids? And you've said it over and over. And then the last time it was, I believe it was in August, maybe, or July, sometime over the summer, you brought it up to me and you said you still don't have those accounts. I'm like, listen, Mom, I don't know what I don't know what's going on. So then you said, this is what you need to do. You need to, and then you kind of broke it down. And I was like, oh, I could do that. That's easy. Like, if you would have just said that 5 years ago, this account would have been rolling. But you want to talk about, oh, make sure you got, and I didn't know. It's just like, okay, I know I need to invest. I'm supposed to do it for myself. We know all this stuff, but we don't really know how to do it. So it's just like one of those
But that's
things.
what I'm saying. Okay, listen, I'm laughing. I'm not laughing at what you're saying. I'm laughing because I want to tell the people she is not my daughter. I know she just called me mom, but she just calls me that.
No, so yeah, because it's a term of endearment. You help me out. It's like a mother figure. And so, yeah, it's just like, yeah. So that's kind of where it was. But then once we didn't focus on everything. Like, oh, you need retirement for yourself. You should be having this account. You should be investing in this stock. And we just like literally, okay, this is what we're going to do. You're going to open an account for the kids. Call Fidelity. Tell them you want to open a UTMA account. And from there, like, again, I have the common sense so I can figure out from that and then ask questions from them. Okay, what does this mean? And then how does that? And then when do the kids have access? And then do I still? So I get to ask those questions from there, but at least I had a real true sense of direction on where to start without all of the crazy terminology. So like, even though the type of account
we're not going to let ourselves get overwhelmed, but we're not going to let any more time pass. And we need to continue. You need to call back up Fidelity because we need to open an account for you.
Yeah. They're gonna be like, hey again. So I was on the phone with them for quite some time because I wanted to make sure I understood what I was signing up for. What is this and what is the impact and implications? If being that right now I'm the account holder, if once it turns over to them and they do something, is it going to mess up me and my banking? And like, I had questions, and so they were great.
Okay.
Yeah.
But yes, let's put this on the agenda that we're going to call back up Fidelity and we're going to set up an account for you. And we're going to get on track with this, but we're going to invest the money because we are looking to get a higher rate of return than just, basically a high yield savings account.
Right.
So right now, my savings and CDs and stuff are between, let's say, about 4.3% to 5.1%. But my investments, some of my investments are significantly higher than 10%. At a minimum, the ETFs that I'm investing into, I'm hoping to get a 10% rate of return.
That's good.
So, we got to realize that building wealth and, gaining financial independence comes from true investing. And investing is different for everyone. We're talking about stocks here, but I would say in general, the people that we know that have built wealth, it's through, having a business, just making different pushes to create an investment that gains more money than, the usual 9 to 5. We really have to take advantage of every way possible. In my opinion, I'm trying to do this with my money. I want to see my money working for me.
Right.
Even like I said, my emergency funds, money that I have waiting potentially to buy a property. I want to see it getting as much as it can, but it has to be accessible. So that money, I'm making sure it's in a high yield savings account. It's in a CD that I would prefer not to break the CD term of the months, but I had some money sitting already for 7 months. My CD term is up and now I can roll it into another one, but I didn't just let it sit in a bank account earning 0.03% or something lousy. I'm trying to make it, trying to put my money to work as hard as possible, as much as possible.
And see, that's the thing, is that with investing and with making these financial progressions, it's so many layers to it, right? You can, like you said, you just mentioned you have your CDs, then you have, your 401k, then you have your stocks, then like there's so many different ways that you can go about doing it.
Mm-hmm.
And that part can feel overwhelming, especially when you have no idea which direction to go in, no idea where to start, what's going to give you the better rate of your return. Some people don't even know what a rate of return is. They just don't know what a return on an investment is. They don't know what percent is a good rate. Like, oh yeah, I got 1% back. Like, oh yeah, I got 1% cash back for swiping at the gas station, and they think that's great, and they're living off those points, and everything is amazing, not realizing that they could have got 10%, investing in the stock market. So it's just, it can be extremely overwhelming, I will say, as someone on the outside.
Well, I don't want it to be overwhelming. I want it to be easy, and I want you to feel like I can do it. I can do it as the kids grow up, they're going to understand. I don't want it to be overwhelming. Not here on this channel.
Yeah, no, I've been taking your steps and advice. I'm not where I need to be, as we said, and but it's giving me that sense of direction, and it's familiarizing me with the terminology. So when I hear, I'm like, okay, I know what that is. Okay, I understand. Yeah. So yeah.
So let's just take it slow, and you make a plan. And when you need me, or I'm gonna at least give you my encouragement.
Yeah.
But if you need me to be on the call with you or help you with anything, I'm here. But I want you to make a plan on what the priorities are.
Right.
And, obviously I want the kids to have money for college for what they need or whatever, but
right.
You need your retirement account too, because no matter how we look at it, we are, like I was saying earlier, if you're in your 50s and you're prioritizing paying for college and paying for weddings and helping everyone around you, when you're 70, are they going to be ready to take you in and have the financial burden? If your Social Security isn't enough, are they going to want to supplement your monthly expenses? We got to realize, what are we setting ourselves up for, and I feel like my priority at some point has to be taking care of Lisa, the older Lisa.
Yeah.
So that I'm not having to be a burden or a worry to my family,
Right.
And
right. Absolutely.
The times that we're living in right now, as we were talking about in our real estate chat, and we were always talking about with just everything being so expensive.
Yeah. Yeah.
And I know it's hard. I don't know what the ages of everyone that's listening in right now. I know a few people's age ranges in the chat, but it's hard to project what you're going to need.
Right.
But I would say I'd rather have more saved and be over prepared. I think most of us in any situation would rather be over prepared than under prepared.
Right. Well, one of the things that I am happy to know about is that my mortgage and I have already been making extra payments and stuff. So worst case scenario, if I had stayed with the minimum payments for the life of my loan, by the time I was 51 years old, or will be 51 years old, my mortgage will be paid off. And so that's pretty early, considering. And then with the extra payments, it'll be paid off before that. I am hoping to have it paid off in 5 years or less. That's what our goal is to have that taken care of. So it's one less debt, one less burden, and it'll alleviate a lot of, what's going to be needed to live. So we'll just have to worry about, our taxes, regular expenses, and just, living life. So it's one less burden, because that's a big, big, big expense to have to worry about when you're in retirement.
It is. And I think about that. Even if I didn't have a mortgage, my taxes and insurance is about half of the mortgage payment. So
Yes.
it's a significant amount of money that I would still
Mhm.
need to be putting aside on a monthly basis. So I
Right.
definitely understand where you're coming from with that.
Yeah.
And I need to make that a goal for myself potentially to concentrate on increasing my mortgage payments,
Yeah.
especially for my primary property, you know?
Yeah. The thing is that it doesn't take much extra to put a dent in there, because you're eating away at the interest. Most of the money that we're paying to the bank is interest. We then pay for the house 3 times, 4 times over by the time the life of the loan has ended. Like, we should have been in a house, $1 million houses, and we're in $200,000-300,000 houses by the time we've paid it off. But it's just small payments. Making one extra payment a year. What happened was I learned about doing a biweekly payment. So it's your mortgage amount. They split it into two, and you pay biweekly. But because a couple of the months a year have 5 weeks in it, so then you end up making one full month's worth of payment to your loan. That shaves off 7 years by itself, just by making one extra payment per year shaves that time off. So think about like how little that is in the grand scheme of things, and how much time you've taken off just like that. And so even if you just put $50 here, $20 here, that all adds up and it all helps. So that's one of the things that, once you can go on the mortgage calculator and see, oh, if I've made an extra this payment, how would that affect? And once we started playing with those numbers and saw like how much we would be saving and how quick it would get paid off, it became like a game. So I was more obsessed and focused with that than the investing side of things, which, I mean, I should be focused on both because both are equally as important. But yeah.
Okay.
Yeah.
But I think you have a plan.
Well,
Did your plan get any clearer with this conversation, or was this?
So it definitely got clearer. I definitely have a road and direction to go down. It definitely got more overwhelming. Yeah,
Don't say
it did.
that.
It did. It
Investing
did.
is not hard.
It is.
Investing
It
is
is.
not hard.
It is. Yeah. No, I'm gonna
No,
be honest.
Drea's in the chat. You can't scare Drea about investing because she has to get on board
Hi,
with this.
Drea. Well, it seems like we both got to get our act together. It's scary, girl.
No, it's not.
It's overwhelming. It's not
No,
doable.
we're going to make it simple. If it's overwhelming, we are going to keep on talking about it and making a plan and making the plan that fits you and makes it simple for you.
That's what I like to hear.
And you are the mom, so you definitely have to get a handle of it because guess what? You have to teach the kids.
That's yeah. That is the scary.
Because,
That
like
was
you
really
said,
scary.
you made it through
leading
high
the
school
blind.
and you made it through all your education, and you're now whatever age you are, and you're confused about this. So let's assume that going to high school and going to college is not going to teach them this stuff again.
See, just even you saying that, like, oh, I have to teach them, that gave me anxiety just now, like a lot, because it's just like I'm the blind leading the blind. I'm gonna learn. I'm gonna read books. I love to read. It's the blind leading the blind. Yeah.
It's not and when is that? When are you not going to be blind? When are you going to have a handle on this?
Well, it depends on what the expectation. Am I expected to have like expert level or just kind of like
no one is an expert. I am not an expert. I am not a
well, okay, so fluent.
I'm just sharing my journey, and I'm trying and I'm learning, and what I want this to be a place is when we learn, we share so the next person can do better,
Well, so and this is the thing too that's also scary is because like you said, no one's an expert. We're all learning and figuring it out and hoping and praying that it actually works. But you don't know until you get there, like, crap, this was not enough money. Like I should have did this. And now it's too late because you're short and, either you're going to die in 10 years or you're going to have to stretch this money out to go longer than 10 years. And I mean, it's kind of like with parenting, you don't know if it's right or wrong, or if you're doing it great, like until you're there, like until it's already too late. It should have already been done by now. So like
Okay,
you
but
could have,
it's not going to be too late for us. Just like the what I showed from the Fidelity website.
yeah,
If you're 30, do you
yeah.
have one time your salary in your retirement account?
So that,
If you're 60, do you have 8 times your salary? Let's use that as a guideline. I'm
no,
saying,
yes, and I think it's a good guideline. My fear is like, say for example, like how inflation is and the cost of living is, it didn't go on track. Like it wasn't a build up to this point. It changed overnight drastically, right? So if you were someone who had this plan, and let's say right before COVID hit, you just retired, or you were supposed to retire the year, and then things changed. Now, what you projected to be able to live off of, that's not anything.
okay, but I think the bigger issue is that you can't just say, "Oh, I don't know how much to do it, so I'm not going to
Oh,
try."
no,
And
no,
I think that's
no.
what
You're
people
right.
are
Yeah,
doing.
no.
I think this is what people are doing. They're saying, like there was a certain person, a certain person close to my age that I was trying to give some encouragement to,
Right.
and this was, they only gave investing a try. It seemed consistently for about maybe 5 months, and
5 months.
yeah, and I'm saying, and they kind of fell off with it, and I'm saying to them, this is not, I was not trying to encourage you we have to give this time. This is a 5, 7, 10 years. Commit to this and then look at what you accomplish. We're not going to see, you may actually be down in 5 months time.
Right, right. And
Okay.
so, yeah, I know
Or
that
you
this,
may be up, like you said, a little 1%. That could happen.
yeah,
But I think that some people in my circle have not invested continuously, or, haven't gotten on board with it to see what it looks like after a substantial amount of time.
right,
I've been investing since I've been, for many years, since I've been 19, when I started working full time. So I have accounts that I can look at and say, okay, this is what investing for over 20 years looks like.
right, right.
But we need to get on board with it so that we can see the results. We need
Yes,
to at least maybe throw some numbers into the investment calculator, and with about 10% rate of return, and see what you can do.
mm-hmm.
And I know it's hard for people that haven't seen it happen yet, but you
Mm-hmm.
have to stay consistent. Because you
Right,
don't stay consistent, you're never going to see the results. I
right.
can't say, if like the guidelines are, at least try to invest 15% of your, and when I say, it's not necessarily going to be 15% of coming out of your own salary, 15% in total. It might be between your company match, what you're contributing, if you have a pension, all of that, at least get that to total to 15%.
Mm-hmm.
If you can't truly commit to a definite 15% being contributed out of your own paycheck. You know what I'm saying?
Yeah.
But we have to push to have some
Something,
to make
yeah.
some strides, and
I
not just
don't,
say, oh, who knows if that's going to be enough,
yeah.
and
So I don't want it to sound
look
like,
for
I mean,
results
I
in a
think we
short
shouldn't
amount of
do anything. We definitely should do it. It's just all of the thought processes that, definitely having something is better than having nothing, and having a plan is better than no plan. And, just all of that is great. These are just like the little,
yeah.
you know,
So when I'm 67 years old, between whatever my pension and my Social Security, and with all of it, if I'm then, pulling money from my retirement accounts, and I still have let's not 67, let's say I make it to 90 years old and I'm having a shortfall of money, I hope that it's not significant, and that you can move something around in order to take care of it. But I know that I tried.
Right. Yeah.
We cannot foresee what the future is going to look like. But if we're not investing in our 20s and our 30s, we don't want to leave this until we're older. And like I said, I'm of the mindset that you got to take care of yourself first. Your kids might have to grow up and they might have to get themselves into some financial debt for higher education and stuff like that. That's not what I want if you're able to, but you got to realize, you got to take a look. In my opinion, I'm going to take a look at where I'm at before I can, help the next person, even if the next person is my own child, depending on what age, what stage of life you're in and stuff like that. But does anybody have any questions or anything to share? This has been a good conversation, I think, and I hope that you I hope you're not overwhelmed. I wish that you were feeling like more confident in
well, I'm confident in the plan, that's, will ask me about 30 days after we've initiated the plan. And then maybe, because now I feel more confident with the UTMA. Well, I did until I found out in this chat that I should have been moving the money other places too. But I felt good about the fact that I had the account. It was there. The bank account is linked. Contributions are being made. So like, I felt really good. So it's good that we're having this talk, because imagine I didn't find out until, years later or never. And the money sat doing nothing.
Mm-hmm. But I think we need to be aware of, the fund that the kids' money is sitting in. You probably don't even know what interest rate it's gaining. I know it's probably something very small, but we need to know what the rate of return is on once you get this investment account going.
Mm-hmm.
It's not good. I'm not saying check it every month, but at least quarterly or something. Be in tune with what it is. Your savings account at your bank. Right now, I feel like I've said this before. If it doesn't start with a 4 or 5, 4 point something percent to
Elisa, are you there? Oh, I don't know what happened to Lisa. Maybe she's having technical difficulties. Can you guys still see and hear me? Okay. So in the meantime, does anyone have any feedback or thoughts to share while we wait for Lisa to get back on?
You still there?
She's back.
Everybody still in the chat?
Yeah, we are still
Did you
here.
entertain them?
Well, I tried. First, I wasn't sure if they could see me or hear me, but yeah.
I'm sorry about that.
It's okay. Oh, thank you.
You were telling them about your business. What is your business?
No, I didn't.
You didn't?
No, no, I didn't.
Wellness. What are you talking about? Congratulations. Okay. So where were we? Okay. I guess we can wrap it up. Thank you for coming on. I hope you I don't want you to scare the viewers saying that investing
No,
is overwhelming because
well, no, but that's the thing. If we're being honest, this is how you help those like me. It is overwhelming. I don't feel that, from my perspective, it's a way to not be it's so much information to receive. And then it's high pressure because you're like, if you don't do this and if you don't do it right, how is your retirement looking? So it's a lot of weight on it. But like I said, I think breaking it down in pieces makes it easier to receive the information than having everything shoved down your throat all at once, making sure that everything is set up for retirement. This is how things fall through the cracks and how you lose people, not you in particular, but how people get lost in the information.
Yeah. And it's not just about retirement for me. It's about everything. Because actually, I guess it is about retirement for me because I want to retire now. So it's about early retirement for me. Yeah. So so I just want to stay focused, stay consistent. And I think that is the key that a lot of people are missing, is they're not staying consistent with it and to the point where they're seeing the results. Give it a chance. And when I say a chance, I mean 5 years, 7 years, keep it going.
Right.
And I've done a few challenges within Keen and Grace's Discord, and I've mentioned them on my channel. And it's not about a challenge. It's just like with working out. Like you could say, Lise, let's do a couch to 5K. But it's not about that. After we complete that program, we're just, after that, when we go to the gym or we go for the run, we're just working out. At some point, it just becomes part of your life and what you're trying to do.
Yeah.
So Wellness was congratulating you because you said that you're like self-employed.
I am, and I do. I just didn't say anything about it when you were out. I was trying to see if they can hear me and everything. And so, but yeah. So Wellness, you are correct. I do. And thank you.
Thanks for sticking with me and still being here when I got back. And thanks for helping me be here with me, Billie, because this was a little bit of practice. I'm not that great with StreamYard. We need to do some more of this so that we can
do this every Friday night if you want to
practice, and I can become better with how to do all this stuff. I didn't even put up a comment and stuff like that. I want to learn more on how to do this. And
so I'll teach you some of the tech, and then you teach me the investing. Let's do a trade for trade.
Okay.
That works.
Sounds good. Okay. But I want you to not let any time pass and do the things that you have on your agenda. And we're here to encourage each other. So if you have anything, encouragement to send my way, I'm here to receive it.
Yes. Well, likewise. And we will definitely be in touch to go over this plan, and now to go over your technology stuff going on over there and get both of us straightened out.
All right. Yeah. Okay, so thank you everyone for tuning in. If you didn't already, please give a thumbs up. Make sure to check out Billie's channel, and her channel name will be tagged in this. And it is Billie Said It on Air. She has a new channel that she started just about 4 or 5 weeks ago.
Yeah.
Yeah.
Mhm.
So check her out. And thanks for tuning in. If you have any questions, if you'd like to come on and chat with me, let me know. I hope that Billie didn't scare anybody off.
Well, I hope that people realize that they're not alone if they're feeling the same way. I think people are not as comfortable saying, hey, this is above me and it's overwhelming, it's a lot. And so just hearing that somebody else is feeling or thinking the same things that you're thinking makes you feel like, okay, I found my tribe. This is here. We can be open and not feel judgment about it and get the help and tools that we need to get on track. Not shame, but guidance, you know?
Yeah.
So
And
that was
I
my
do
goal.
agree with you that it could be some of the, the terms and the processes and it could be a little confusing, but I think it's important. So
It is.
that's what matters. When we want
Mhm.
something, we go after it. When we want to figure something out that's a priority to us, we figure it out.
Right.
So,
Absolutely.
it's not any harder. I've mentioned this before. I don't think it's any harder than going online and doing your online shopping and doing so many other things that we figure it out. So we need to figure out how to get in this app and do our investing and check on how our investments are progressing.
Right.
It's worth it. It's definitely
It
worth
is.
it.
I
So,
agree.
all right then. I'm going to wrap this
Okay.
up. Thanks for tuning
Okay.
in. Good
Thank
night.
you, everyone. Have a great night. Thank you for listening.